I saw that Larsen and Toubro, or L&T, released their earnings report. And it's pretty dense with information. Where should we even start with this?
Well, let's dive right in, shall we? L&T is a massive Indian multinational company, right? Involved in EPC projects, high-tech manufacturing, and various services. So, it's quite diverse. They've been around for about 8 decades, which is incredible.
Okay, that's a lot. So they're not just like a construction company, right? It's more like a diversified industrial conglomerate.
Exactly. Think of it like a giant toolbox with a bunch of specialized tools. They have segments that deal with infrastructure, energy, high-tech manufacturing, IT services, financial services, development projects, and even a bit of real estate. It's quite the spread.
Wow, that sounds complex. So let's talk about the numbers, I guess. What's the headline from the financial results?
Okay, so for the quarter that ended December 31st, 2024, they've posted consolidated revenues of about 64,668 crore rupees. That's a 17% year-on-year growth, which is quite impressive.
Okay, 17% growth. That's pretty solid. What about their profit, or their PAT, as they call it in the report?
Right. The consolidated profit after tax, or PAT, came in at about 3,359 crore rupees, a 14% increase compared to the same quarter last year. So both revenue and profit are showing good growth, which, well, is a good sign.
So that's good for the quarter. But what about the 9-month period? Any differences there?
For the 9 months ended December, their consolidated revenue hit 1,81,342 crore rupees with an 18% growth, and PAT was 9,540 crore rupees, showing a 10% growth year on year. So they're growing quite consistently.
Consistent growth. That's key, right? So where is this growth coming from? Like, what are the different segments doing?
Right. Their infrastructure project segment saw a 15% revenue growth, and the energy project segment, well, that really took off with a 41% increase in revenue. That's huge. High-tech manufacturing also contributed with an 18% growth in customer revenue.
41% in energy projects? Okay, that's impressive. So it looks like different areas are doing well, not just one segment carrying everything.
Precisely. It's like a well-oiled machine where all the different parts are contributing to the overall performance. Even their IT and technology services segment grew 8% despite some margin pressure due to employee costs and forex losses.
Okay, so most of the segments are doing well. What about their order book? Because, they need future work coming in, right?
Absolutely. This is where things get really exciting. They've recorded their highest ever quarterly order inflow at 1,16,036 crore rupees, a massive 53% year-on-year growth. That's like a future promise of revenue.
That's crazy. 53%? So they've basically got contracts lined up for a whole bunch of future projects. That sounds like good news.
Exactly. And their total order book now stands at a staggering 5,64,223 crore rupees. That gives them a solid foundation for future revenue. Think of it like a backlog of orders, but a very good one.
Okay, that puts their future in perspective. So I guess this must be mainly from India, or is there international work as well?
Well, this is interesting, right? International orders made up 53% of the total order inflow for the quarter, which really highlights their global presence. And their international revenues are significant too, making up 51% of their total revenue this quarter.
51% from international sources. That's huge, right? So they are basically, a global player and not just focused on India.
Exactly. For the 9-month period, international revenue was 50% of the total. So they are very much a global entity. It's like they have their fingers in pies all over the world, not just the Indian market.
So, all this sounds great, but what about the nitty-gritty? Any red flags that we should be aware of?
Well, the EBITDA margin for the energy projects segment did take a hit, dropping from 9.7% to 8.3% due to the execution stage of some projects, and the IT segment's margin also dipped due to higher employee costs.
Okay, so some margin pressure in certain segments. What about their debt situation? Any concerns there?
Their debt to equity ratio is about 1.18, which is, something to monitor, but it's not alarming considering their scale and type of projects. The company's financial services arm also has a loan book of around 95,120 crore rupees, growing at 16% year on year, but is mostly retail with appropriate risk measures. According to the release disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Right. Okay. So debt levels are manageable for now, I guess. What about their cash flow? Because, cash is king.
Unfortunately, this report doesn't detail cash flow, but it does mention their strategic investment in E2E networks, a move to tap into AI and digital transformation. So they're clearly, thinking about the future.
Okay. So they're not just building bridges, they're also like making moves in tech, right? Interesting.
Right. They're also focusing on digital adoption to improve productivity, which, is really key in today's world. It's like building a better hammer to make better things.
Okay, so overall, it looks like the company is performing well with significant order inflow, revenue, and profit growth, with some minor margin issues and debt levels that need watching.
Exactly. And the management seems optimistic about the future, with government spending rebounding and the Middle East continuing to develop its infrastructure, which bodes well for them.
So it's like they're positioning themselves to take advantage of global growth and technology trends, right?
Absolutely. They're talking about how India is expected to have a good GDP growth and that the government's continued focus on infrastructure investments will benefit them. So, yeah, they look well positioned.
What about any other interesting information? Anything like stand out from the report?
Well, L&T also won a significant order for setting up freight handling facilities in the GCC region. So, they're not just getting orders for their core businesses, but also like in related sectors, which is always a good sign of growth.
Okay, that's a good addition to their growth. So what's the overall outlook based on this?
The outlook seems quite positive, with a robust order book and a clear strategy focused on growth and leveraging new opportunities. They are confident about maintaining growth momentum.
So if you were to summarize, what's the main takeaway from this earnings report?
Basically, L&T is showing strong growth across the board, driven by its global presence and diversified business. They have a record order book and are positioning themselves to capitalize on future opportunities, despite some margin challenges.
Okay, so they're like a big ship sailing in the right direction with a few, waves to navigate, but on the right path?
Exactly. They've got a good crew and are charting a course towards sustained growth, I guess.
All right, so lots to unpack here for investors to consider. I think that's a great analysis. If you're liking this type of analysis, make sure you like, share, and subscribe to the channel so you don't miss out on any of our future content.
Yeah, absolutely. And are they going to continue this growth? And what about the global challenges? What if they face unexpected cost increases? Those are the questions to keep in mind. What do you think?
Definitely lots to think about. And how will the recent strategic investment in E2E networks impact future earnings? I mean, it all sounds interesting, right?
Right, that's true. So much to unpack with a company of that size and scope, but it certainly seems like they are well positioned to continue growing.